Okay, for this video we are now covering Schedule C of the Form 5471, which is the income statement. So Schedule C and Schedule F, F is the balance sheet, Schedule C is the income statement. These items are generally required for certain types of category filers. So if we jump back to the required information table, again you can find this in the Form 5471 instructions. We see here Schedule C and F, right, on the required information schedules, and which types of filers must complete this information. So C and F, again, that's the income statement and the balance sheet. These are for Category 3 and Category 4 filers, right? So you recall that our sample fact pattern, the U.S. person, John here, he is both a Category 3 and 4 filer for this year. So when he completes the 5471, he needs to include this information. Okay, so some of the basics on the Schedule C. Schedule C, remember, ultimately when you file the Form 5471, most of the dollar values have to be translated into U.S. dollars. So when we talk about whatever fiat currency you're using to keep your books, whatever your functional currency is, you very often have to report those numbers, right? So they match your financial statements, but you must ultimately translate everything into U.S. dollars. And that's because the IRS needs to see the U.S. dollar amounts, because we report income in U.S. dollars in the U.S. and we pay taxes in U.S. dollars. So a couple of the basics here. Functional currency. You remember in this example here, the company is keeping its books under the U.S. dollar, right? So if we look at the sample books here for our Cayman company, we have our fake offshore company limited. This is the P&L here on the left, March 1 to December 31st. And then we got the balance sheet here on the right-hand side. And you can see here it's being expressed in U.S. dollars. So because we have our functional currency in U.S. dollars, there's no need to translate the amounts, right? Because we're already using U.S. dollars. If your functional currency was in something other than U.S. dollars, you would report the income statement amounts here, right? So your gross revenues, cost of goods, different types of investment income, your expenses, and then ultimately your net income or loss would first be reported in the functional currency and then translated to U.S. dollars. So how do you translate to U.S. dollars? Well, the form instructions state that the translations, so you can see here in the first line here, report in functional currency in accordance with U.S. generally accepted accounting principles, and then also report the U.S. translated amounts from functional currency, U.S. GAAP translation rules. Okay, so what are the U.S. GAAP translation rules here? The baseline rule is that when you have functional currency translated to dollars, you're supposed to use the exchange rate on the date that the expense was incurred or the revenue was recorded. So exchange rates fluctuate all the time, so arguably you could be making those translations on a daily basis, which is obviously very burdensome. So then there's a caveat in the U.S. GAAP rules. Let me pull up the guidance here. Okay, so I have copied and pasted the relevant accounting standards here. So ASC 8030-105510 and 105511. So the baseline rule, this top item here, income statement item should be translated using the rate in effect at the date the item is recognized. Okay, that's the baseline rule. However, these two provisions here allow management to use an average exchange rate up to their discretion, right? So if the exchange rate is not fluctuating too much throughout the year, you can use either an average yearly rate or you can use an average monthly rate. Use something that is more administratively feasible than having to use a spot rate every single time you record something on the P&L. So, I mean, if you look at the financial statements, imagine recording dividend income on a daily basis or quarterly or monthly basis and having to come up with an exchange rate every time something is recorded in the books, right? So that's the general rule for GAAP financial statement translations. But in this case, again, under U.S. GAAP, you are allowed to use average exchange rates if that's more administratively and economically feasible. Okay, so a lot of this does come down to your discretion, but the rule is, when you're preparing these, most of the time we're just using average yearly rates, to be perfectly honest. So the functional currency is all reported here on the left-hand side column, and then the amounts are translated from functional currency to US dollars using the average yearly exchange rate. And you can find those normally on the IRS website. You can also find them on other third-party sites like Oanda is a good one. And so that is a good way to get it into US dollars. Now in our case, because US dollar is our functional currency, we don't have to complete the functional currency column. We can just use US dollars. So if we look at the financial statements again, on the P&L. We'll get to the balance sheet on the next video. But on the P&L here, again, remember, this is an investment company that's just investing in portfolio type instruments, right? So we have capital gains on the sale of stocks. We have some dividend income, interest income, and then we have some various expenses here in connection with operating the company. So John, taxpayer, remember John is the owner. He's our U.S. person here. He paid himself basically $1,000 out of the company as acting as the chief executive officer, the CFO, right? He holds multiple titles, and so that was his compensation for the year. Accounting fees, so they paid John's accounting company $1,500 in accounting fees. We'll come back to that again because that's going to come up when we complete the Schedule M for related party transactions. Then we had some licensing fees, legal fees, and then some office supplies. So after we record all the income here, gross income of $32,335, expenses of $86.59, we have net income or loss per books of $23,676. And again, these are expressed in US dollar amounts. So now if we look at the income statement again, we're literally just reporting those items on our book financial statements with these line items, right? So we have the US dollar amounts, we have our dividend income, our interest income, the net gain or loss on the sale of capital assets. So there's our total income of $32,335, compensation of $1,000, licensing fees, and then other deductions here, $7,159. You can see here we have a statement 2 attached with some more details. So if I go down to statement 2 here, we can see Form 5471, Schedule C, line 17. So there's the breakout, right? So we have our accounting fees, our legal fees, and our office supplies. Okay, so that's the 7159 number. Now total expenses, $86.59, and then we have our net income or loss per books before these unusual or infrequent items and the income tax expense, benefit, current or deferred portions. We don't have any income tax expense for this business. Again, remember, we're set up in the Cayman Islands. Cayman Islands doesn't have any income tax expense. And all the investments that we're involved in didn't generate any taxes at source. So we didn't have any kind of withholding taxes or anything like that. So our current year net income or loss per books on line 22 here is $23,676, and that reconciles with our net income or loss per books amount here. Okay, so the last items here, foreign currency translation adjustments. Again, if in doing these adjustments and in booking the sale items of certain assets, we had any kind of translation adjustments, then we would report those down here. But again, because we are because the functional currency is in US dollars and we are just reporting it in US dollars here on the right hand side, we don't have any of those kind of adjustments. Okay, so that covers it for Schedule C. Now we'll move on to the next video, which is going to be Schedule F for the company balance sheet.